Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere, bringing you your daily market insight video here on Monday, June 27th, about 20 minutes after market close, 4:17 p.m. Eastern time to be approximate. And in today's video, we're going to look at some key levels that you should be watching both on the upside and the downside for the S&P and QQQ. Additionally, we're going to look at some of the top stocks and sectors of the day, some of the worst performing names of the day, the dollar, interest rates. We're going to talk about it all. So let's get right into it. What just happened? Choppy digestion after Friday's move, but a tight range. So intraday wise, kind of choppy back and forth, but the Qs, the S&P, the other major indices, all pretty tight range. And that's important because over the course of the last 2, 3, 4 months, we've grown accustomed to very volatile and broad ranges on the S&P. So today we were in about a 1% range. That is not something we've seen very often over the course of the last few months. So tight range today. Performance-wise, pretty mixed, as you can see. G6 slightly green, S&P down 0.3, Qs down 0.73, Dow down 0.2, mid caps and small caps both up about 1/3%. 60-40 down about 1/3%, and grow down 0.32 today. So not really any, you had small and mid caps outperforming, but not anything super noteworthy. They also, mid caps had lagged a little bit off the bottom relative to the Qs and the S&P. So nothing super noteworthy performance wise, just a lot of kind of digestion and consolidation today, not really making any decisive moves one way or the other. Market state remains the same as Don's video on Friday. So correction, day 5 follow through day, and then trend gauge is also going to stay the same here as Don's video on Friday. We closed right on the 21 EMA on the S&P 500. Mid cap still kind of struggling to get back over it. Dow basically right on it. So if we see further positive continuation or positive follow through, more closes above the 21 EMA across the major 5 indices, as well as market leaders, then we'll probably be bumping this to neutral. But as of right now, today stays the same as it was on Friday. So before we get to the tail of the tape, like I do in every video, I'm just going to briefly touch on Revere and what we do and how you can reach us. And again, this is me right here. If you have any questions or comments on the video, something you want to know more about, you want to know why we think these are key levels, or whatever the case is, just don't hesitate to send me an email. Don't hesitate to call. You can freeze it right here if you want to look at that number, but it's 855-732-5932. Or you can reach out to anybody here, Dan, Tim, Don, or Merrill at revereasset.com as well. So let's get to the tail of the tape. I do have the S&P 500 up here on the right side of the screen. So we're going to work through this. And then once we get to the action, I'm going to probably flip this to a 5-minute chart so you can have a little bit more of a nice clear view of the intraday movements we saw today. So sentiment-wise, put-call ratio basically still kind of in the same range, 0.9 to 1. We did see it spike up over the course of about a week or two ago, as we've talked about on the podcast, but still kind of reverting back to where it's been hanging out, which is pretty close to 1 more often than not for the duration of this year. VIX really not doing much today, just basically flat. 27 basically where it's hanging out. It's kind of been there, hanging out around this 30 level. It's come back down a little below it, but haven't seen a meaningful pullback or drawdown in the VIX at this point. Now, if you get a big, huge rally over the next 2 or 3 days, that would probably do it for you. And then fear greed, still in the fear range, right around it, or 29, still kind of in the same vicinity we were towards the end of last week. So as we talked about a good bit, bull case, initiate a rally and reclaim the 21 EMA. That happened on Friday. However, today we closed right on it, so that's not broken by any means. And as you can see here, 610 was when this rally attempt failed. So we're still in the midst of this rally attempt. Hasn't been broken yet. We're still hanging out right around that 21 EMA. You want to see this hold, and we're going to talk about these key levels in just a second. News-wise, crypto hedge fund defaulted on $670 million loan. We've talked about some of these crypto hedge funds having some issues running into things like this pretty frequently over the last few weeks to months with some of the demise in cryptocurrency. Watching support this morning, 3,900, a little precursor to one of our huge levels, key levels we're paying attention to here. What would happen at that support area? And we tested it / danced all around it, more or less for the duration of the entire day. So we're going to go ahead and get to the action and look at that. So opened up slightly green, intraday cup and handle fails, pull back in tight 1% range, consolidate all around 3,900. We did pull back a tiny bit into the close, but came back off of those lows a small amount. Like I said, tight range today, and then we closed right on the 21 EMA. So I'm going to minimize this, pull the S&P up here on a 5-minute chart. So you can see here we opened up slightly. That ended up coming back down pretty quickly. This is that intraday cup and handle. If you follow my cursor, you'll see here it is. It looked like it was going to work, but ultimately it stalls out. We pull back again here to this 3,900, and then basically for the rest of the day, we're just kind of consolidating / dancing all around 3,900. Had a little bit of a pullback into the close. Like I said, here we retested these lows, roughly 38.89, 38.90. But then last couple of minutes moved back up, closed right at 3,900. So pretty much spot on the 21 EMA, like I said here. So low 38.89, rounds up to 38.90 really, and then the high 39.28. Just a tight range. I mean, just look at the size of this candle versus the size of pretty much every other candle you see here in the last 2 or 3, 4 months. I mean, not many candles are this size compared to the rest of them when you go through here. I see maybe 1 or 2, 3 or 4 at the most, really over the last 4 to 6 months. So not a whole lot of tight ranges like you saw today on the S&P since this nasty market kind of began at the beginning of the year. Notes-wise, GDP final Q1 print on Wednesday, and then CPI on Friday. Performance-wise, we ran through this, but S&P opened up 0.25%, closed down 0.3. G6 up slightly, 0.31, 60/40 down 0.36, grow down 0.32 today. Sector-wise, oil is making a nice bounce after some really, really harsh selling in pretty much every oil name out there. Utilities, healthcare, solar, metals and mining, fertilizers, all green today. Bond, software, retail, XL, CY, and K, which is communications, discretionary, and technology, all red today too. We did add a decent bit of exposure today, however. So beta moving up from 0.34 to 0.66. And when I say beta, I'm talking about Revere volatility here. This is our measure. Don's talked about this a good bit. So not a pure beta, a little bit of a manipulated one, but that is to account for the actual volatility, not just the number itself. So we bought 20% of the S&P 500 here. That's VU. We added to Zoom a position that we already had, and then we added another 5% to the Qs today. Bottom line, normal digestion after a strong move, tight range, like we've talked about a decent bit. So real quick here, 3,900 is today's close, digestion after a strong move, right on the 21 EMA. And then like we can see here, the declining 50 is approaching this 40, 50 area right now, right around 40.55. So we're going to go ahead and get into the charts of the indices here. And as you can see here with the S&P, we're going to talk about these key levels first here on the S&P and the Qs. This 3,900 area is the first level we want to talk about. And that's what we were watching today coming into as a support area. That area generally kind of held today. So as far as a level that's as close as you can be to right on it was more or less where we closed today, 5 cents above. You really want to pay attention to this and the lows of today. So 3,900 area was a huge battleground back in here. Now that we have gotten back above it, that's a huge step forward. Now we want to make sure that that can hold. If that gives way, then you're looking at 3,800 and possibly this hooking up 80 MA as your levels of support. Now to the upside, 4,000. We have talked about this level. I've talked about it in exhaustion. This is a huge psychological level for the market. You can see we battled all around it here, reclaimed it, and then ultimately broke down again. But this 4,000 level is going to be a big spot, just psychologically as well as just for the market in general. You can see the 50-day is quickly catching up to that. but this 4,000, call it 4,000 to the 4,050 area, which puts you pretty close to where the 50-day moving average is. That is the next big level or big hurdle to the upside for the S&P 500. So first, got to clear this 4,000 level. And then secondly, that 50-day is going to be right above. So this 4,000 to 4,050 area, a huge level to watch for the upside. I would pay very close attention to how the S&P acts if it gets up into that range. Is there still a lot of buyers showing up? Is it starting to look like it's possibly getting tired? Those kinds of things. This is going to be a huge make or break area for the S&P. Can it get through that 50-day? Is it just going to run up and challenge it and ultimately roll over? So that's what we're watching here to the upside. 4,000 to 4,050, big area to watch. 50-day moving average and 4,000, a huge psychological level as well. So QQQ, same kind of situation here. It's a little bit stronger, closed very close to the 21 today. You can see here, but same thing here. We want to see this 290-ish area defended, and this is basically correspondent to the 3,900 level on the S&P. We want to see this 290-ish area hold. This was a big battleground again back in May. You can see we got back above it. And then the same kind of breath as we were talking about here with the S&P, the next big level above is this 300 level. Again, huge psychological level, big round number. Always are going to be important levels in the market. And then for the same, pretty much the same thing here as we saw with the S&P, the 50-day is a little bit above. It's at 305. So this 300 to 305 area is going to be pivotal on the Qs moving as far as to the upside goes. And again, these are big spots, big moving averages to pay very close attention to, as well as this corresponds to roughly the bottom of these consolidations. So 300 to 305 corresponds to the bottom of this consolidation here in May. And then if we go back to the S&P real quick here, 4,000 to 4,050 kind of corresponds to this area here. It's a little bit higher, 4,074 roughly. But those are just kind of the areas you want to pay attention to. There's a big area of interest here, 4,000 to 4,050, even up to 4,100 potentially. And then on the Qs, 300 to 305. All right, moving along here, IWM. As I mentioned, a little bit weaker than the Qs perhaps off the bottom here, but closing right on the 21 today after getting right up below it on Friday. So you got IWM attempting to get over the 21. It did so today by just a little bit, as you can see, and closed slightly above as well. And you're going to see pretty much the same setup here on all the indices. Again, this 180 to 185 range is going to be a big level on IWM. Same situation, big level of support that was lost along with the 50-day right there, kind of coming down towards it. MDY, the weakest of the bunch, coming off the bottom, you can see has not gotten above the 21 EMA yet. And it's kind of the same situation here. You can see this RS line angling down pretty sharply since this area here, just meaning it hasn't had as much juice off the bottom. And MDY just now getting back up to the 21 EMA. So pretty much the same setup on all the major indices. You just have more relative strength in the last week or two out of the Qs here for MDY. And then we're going to move to DIA quickly here. And this one, another one that closed basically right on the 21. This looks almost identical to what you see with the S&P 500. So again, if you're looking at DIA, this 320 level is a big spot to reclaim. And then you're looking at the 50-day moving average along with this consolidation area, the lows in here kind of corresponding to that. So that's kind of the general setups that you see across the board on the indices here. Very important to watch those levels. And also something else to note here, I'm going to pull up SPY really quickly. We have not actually tested the 50-day in over 2 months now. So since we broke down here on the 21st of April, we have not tested the 50-day. We got close here, but did not do it. It's not very often that you don't test the 50-day for 2 months, whether it's an uptrend or a downtrend. We have not been able to make a run back up and legitimately test it since the breakdown here at the beginning or at around April 20th, as you can see here. So very important to note that, just something to monitor. Now let's move along here to the dollar very quickly. UUP starting to get a little weak here, as you can see, testing the 21, but for all intents and purposes, this is still in an uptrend, still looks fine. Dollar continues to kind of trend higher, even though it's pulled back over the last 7 to 8 days or so. And then TNX, get that right for you guys, TNX looks like it's continuing its ascent as well, bouncing, and then on Friday was green again today. Again, this is the 10-year note. It looks like possibly turning this 3% level, which corresponds to this 30 here, into a support level, which was previous resistance. So TNX, 10-year note continuing higher. That means yields are continuing higher. Now let's get into some of the top stocks of the day. Okay, so some of the beaten up commodity names that have had a nasty sell-off over the course of the last few weeks getting a bid today. So these are both coal names, AMR and Arch, both up like 4, 5, 6% today. As you can see here, sold off a decent bit, but these are super volatile names as it is. But again, green today, along with a lot of other commodity names like oils, for example, XOP having a nice green day after just a brutal sell-off here. You can see from 170 to about 120 in 2 or 3 weeks. Still not even up into the declining ADMA and up 5% today. XLE, I believe, up about 2.5%, 3% today. So oil stocks catching a bid, DVN and VLO, two of the names that were some of the highest percentage gainers today, both up about 7 or 8%. We also saw fertilizers have a nice green day. CF up about 4% here. MOS up about 4.5% as well. But these are not constructive charts. These have been hit pretty hard over the course of the last month or two. And you can see here, looking at MOS, just re-challenging the 200-day after breaking down pretty nasty there. So could be an area of resistance here on both of those names. We saw strength in the solar space today. Enphase, one of the top names we're watching here for Grotection and at Revere. Great fundamentals, checks a lot of the boxes and nice relative strength today. Sedge is the other big name in the American solar space, also up about 4% today. So strength in solars, as well as continued strength in these medical names. Lilly continues to move higher. UTHR, United Therapeutics, continues to show relative strength and move higher. Bristol Myers Squibb, there's a lot of names in here that you could go through. Continues to be strong here. And a lot of these names had nasty shakeouts and have had vertical recoveries. As you see here with Bristol Myers Squibb, you can go look at a handful of names in the medical space. Merck is the same way. Just really vicious moves down and vicious moves back up on some of these names. We also saw LNTH show nice relative strength today after holding up really well relative to the market. And lastly, on Semiconductor, a name we once did own, not the best looking chart here, as you can see, had a nasty sell-off from 67 down to 50, but I wanted to point this out today because it was showing big RS versus the indices, as well as was up almost 3%, 2.5% on a day where semiconductors were actually struggling. So for what it's worth, on showing some strength for at least today. On to what was not so great today, the high beta names like Net, taking a breather after a strong move last week. Net down about 5%. Bros, a name similar, down about 4%. Snow, another high beta growth name, strong move last week, down about 2.5% today. So again, these are normal pullbacks, consolidations, whatever you want to call them. A lot of these names had really big moves last week, digesting a bit right now. We also had the continuation of some of these food-related commodities as far as continuation to the downside. This is the agriculture fund here. You can see it's down today. Corn continues to be weak, down 2.5%. Wheat, same situation, down about 2%. So these were some of the strongest looking charts in the market up until about a week and a half or two ago. And then you can see here they started to break down as well. Google and Amazon, the weakest of the big tech names today. But again, look at this strong move from Google. This is a normal candle, a relatively normal pullback considering the move it made from here to here. Nothing necessarily out of the ordinary. And then Amazon's pretty much going to be the same thing, down a little over 2%. But in terms of the move it made here, nothing extremely out of the ordinary. So Google and Amazon weak in the big tech world today. Jets, the travel sector, also having a tough go of it. Week today, and you can see the RS line not really doing what you would want it to do since this recent bottom or this recent low that RS line has continued to angle downward. So the travel sector is still having a tough go of it. So that is going to be it for the video. Now, just to briefly touch on those key levels that we mentioned, that's going to be 4,000 to 4,050-ish range on the S&P 500. That corresponds to the 50-day moving average, which is right there above 4050, as well as kind of the bottom side of that consolidation range. Those lows are all around 4070 to 4075, more or less. As far as where we're at right now, that 3,900 big level to hold. On the Qs, keep an eye on that 300 to 305 range if it gets up into there. And then again, to the downside, we want to see that 290 area hold, which is roughly kind of where that 21 EMA is. So those are the levels we're watching really closely here at Revere. And I hope you guys watch those levels too. But I will see you guys on Thursday's video, as well as the podcast. Hope you all have a great week. Thanks everybody for listening and watching.